Hey, what's up? It's Charmaine, expert bookkeeper with Charmaine L. Fuller Bookkeeping Services. So, profit and loss. What is the profit and loss? What does it do? Why do you need it? What is it saying? All that good stuff I'm going to hit up in this particular video. So, your profit and loss statement is a snapshot of your business's performance during a specific period of time. So, January 1st through January 31st. Now, balance sheet is for a particular date, so as of January 31st, and your statement of cash flows, just like your income statement, is from a specified period of time. But your income statement is going to show how much money that your company has made and spent over this time period, and it also gives insight on how you manage your sales and manage your expenses. It allows you to see which months are the slower months. It allows you to see where you might have opportunity to ramp up sales. It can also help you to forecast and make better business decisions for your company. So your income statement or profit and loss is going to be the revenues or income that you have coming in minus those total expenses, which is going to give you a net income or a net loss. Revenue is all the money you make from sales, revenue, all that good stuff. Sometimes, not for our service providers don't typically use cost of goods sold, but those are just costs that are directly related to the product or service that you are providing. Your expenses, of course, are the total costs that are associated with operating your business. So expenses are things like rent, interest, marketing, software, supplies that are not associated with cost of goods sold. Expenses are not loan payments, credit card payments. Typically, if you are a service provider, it depends on how you are set up tax-wise. You want to check with your CPA. But most sole proprietor LLC service providers are not cutting themselves checks. They are taking out owner's distributions instead. So those would not show up on your income statement as well. Those are balance sheet items. Putting them on your income statement gives an accurate view of what your business is spending money on in the space of your income statement and the profit and loss. The interest from those things will show up on your profit and loss statement, but the payment, the actual loan payments, will show up on your balance sheet. This is why when you see net profit at the end of the month, you can't go, oh, this is the money that I can now take out of my business as an owner's distribution. Because when you head over to your balance sheet, those actual loan payments are going to be on there, and then it will have a retained earnings. And retained earnings is basically what's left over after you've made all of your loan payments, your expense payments, all of that good stuff. The statement of cash flows brings all of that together. So when you look at your statement of cash flows, you'll be able to actually see what you should or should not have taken out. And that ties it all in together. So but I'm letting you know the three reports you need to be looking at in your business are the income statement, balance sheet, and statement of cash flows. So to get, again, that net profit or net loss, the revenues minus the expenses will give you either what you've made or what you are in the hole for. Also on your income statement, owner's investments do not show up there because they are not technically income. It's an investment that is a balance sheet item. So using that profit and loss to see what your business is doing, what's going on, seeing trends and things over time on, where you're spending, where you're making money. It's going to really be what your profit and loss is going to show you. And again, it's only a piece of the puzzle. It's not the full puzzle. In order to get a fuller financial puzzle of what your business is doing and how it's performing financially, you're going to want those other two reports, which is that balance sheet and that statement of cash flows, which I will be talking about later, in order to make a full financial decision. Ooh, say that 3 times. So that's your profit and loss statement. It's so important in how you do business. It's so important in how you make moves and choices and decisions in your business. Now, if you want to learn more about this and how to use all three of these statements to make some decisions in your business, how to read them, how to set things up, I want to invite you to the Be Your Own Bookkeeper class that's coming up. You can see the link down in the comment section below, or you can read my blog post about this very subject and going deeper into the profit and loss statement. So both of those links will be down in the comment section below. So thanks so much. To your prosperity. Any questions, comments, throw them, pop them below, and I will talk to you later.